Hello and welcome to Morningstar. I'm Emma Wall, and joining me today to give his 3 stock picks is Chris Morrison, Investment Manager of the GAM UK Diversified Fund. Hi Chris.
Morning, Emma.
So what's the first stock you'd like to highlight today?
First one is Morrison, the UK retailer. So this is probably one of the most disliked stocks in the FTSE 100 at the moment. It's perceived as being out of date and behind the times, particularly when it comes to bricks and mortar model. And interesting, it's a very emotionally charged stock. I think anyone you speak to always has an opinion on M&S, which in one sense is great because it means it's got a strong brand. But in another sense, it means that sentiment is prone to big swings from optimism to despair. And really, as an investor, that's what I'm trying to capture and take advantage of. And with M&S, we've very much been here before. So if you look back to the late 90s, it was the first ever UK retailer to achieve pre-tax profits of £1 billion. 2 years later, it had a huge profit warning. The share price absolutely collapsed. But then it took years and years to rebuild itself, and it got back to that pre-tax profit number. And I just think that maybe if we look at it from a historical context, then investors are too quick to write it off at the moment.
It has been in the news quite a lot recently because the new chief executive has announced a closure of a lot of stores, including the flagship one on the Champs-Elysees, which I personally am very sad about, and also a move to more food-only stores. I mean, how does that rhetoric tie in with the sentiment, as you were saying? Yeah,
I think it's been perceived that the clothing offering has to be scaled back. And actually underneath this as well, there's been so much good work going on for the past few years, which investors are probably overlooking or the market's overlooking. For example, it's invested more in the last 5 years than Next has in the last 30 in improving its online offering, its supply systems and that sort of thing. And Steve Rowe as well, who's CEO, he was head of food before he became CEO, so he's very experienced within M&S.
And what's the second stock you'd like to highlight today?
The second one is Balfour Beatty, the UK construction company. And just if we take a step back, the sort of stocks I'm most drawn to are the ones that have underperformed, are undergoing very tough times, have been mismanaged, but ultimately and critically have the ability to be rehabilitated. And Balfour firmly sits into that category. The problems on it are all too familiar. During the good years, which spanned 2002 to 2008, it's prioritised revenue growth at the expense of everything else, really, and it did that through M&A. And at the same time, contracts were being agreed on very, very loose terms. And essentially, as the market rolled over, the emperor was left without any clothes. And what's most interesting about it today is that Leo Quinn, the CEO, a new CEO, has been parachuted in, and he's effectively a restructuring specialist. And he's not doing anything out of the ordinary, but just very much simplifying the business and making it much more centralised. So, for example, it had something like 35 paternity leave contracts before he joined, just to give you an example of how diverse and sprawling it was. And I think that given its very checkered history, the market isn't quite yet willing to give it the credit it deserves for all the restructuring that has taken place.
And what's the third and final stock?
The third one is Rentokil, the UK pest control business. So this is one it's come an awfully long way from when it was founded in 1925 by a professor at Imperial College. I think he was asked to deal with a beetle infestation at Westminster Hall. And it's further along the restructuring path than the last 2 stocks I've spoken about. And it's one we're intricately aware of this journey because we've been investors for over 10 years. But we still think there's further to go. It has 2 very, very good divisions and a poor one as well. It's called Workwear. And that's where I feel the opportunity is, because it is trying to restructure that. But ultimately, if it can't do it, then maybe it's better off being owned by someone else, in which case the proceeds will be returned to shareholders.
Chris, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.